sponsored by the Securities and Exchange Commission of Nigeria.
Investors seeking exposure to companies operating in Nigeria sometimes struggle to find what they want on the NSE. Trading on the NSE is currently dominated by less than 40 companies, including banks, cement makers, and consumer good companies, including brewers and food makers. However, with the Nigerian economy forecast to grow by almost 7% in 2013, many investors are looking to buy companies not currently listed on the NSE. Furthermore, investors in private placements of non-listed companies are also looking for a more liquid market for their shares. The National Association of Security Dealers is a platform recently approved by the Securities and Exchange Commission as an over-the-counter market for unlisted companies. Its introduction in 2013 will address an important gap in the market.
A small group of operators have remained faithful to the idea over the years. And we're glad that last year we were able to get Securities and Exchange Commission approval for the market. Basically, the idea was to provide a transparent platform in the trading of securities that are already issued to the public but are not listed on the exchange. And you know that in such circumstance, nobody will know what the value of the shares are based on supply and demand. You can do your own valuation, but that doesn't relate to what is happening in the market. I think this market now coming in and this platform will provide a basis for people to be able to trade transparently, bring all those securities transactions within the purview of some regulated entity, as well as deepen the market. As you know, there are some big companies that their shares are traded over the counter right now. They are non-regulated. The officials of the company double as the brokers, and they are not registered brokers. I think this will bring an end to that. The importance of this platform cannot be overemphasized. There are many people who have bought securities either with express, implied, or assumed expectation that they will be listed. Today they are not listed. They are stuck with those securities. There is no liquidity for them. This platform provides an opportunity for anybody who has bought any of those securities first to achieve price discovery and also be able to exit, and for new investors to be able to come in. And I think as this process goes on, adjustments will be made in the value of those securities as well, just as you have seen the adjustments on the stock market. This market will not provide a hiding place for any security. Indeed, it provides that those securities will be exposed to the forces of supply and demand. At last count, I think we're looking at about potentially 400 companies. And for an over-the-counter market, you don't need to list for your shares to be traded. Because if your shares are already in the hands of the public, all they need to do is approach a broker, a dealer in that market, and they will introduce the securities to the management. We will have about 2-3 lists, which can also provide guidance to people. Those who are meeting the requirements of the law with respect to disclosures will be on one list. Those who are not meeting the requirements of the law with respect to disclosure to the public will be on another list. I think what this will also do is ensure that the corporate governance guidelines of SEC can be applied on public companies, which by law are defined as companies with 50 shareholders, more than 50 shareholders. It will also allow SEC to be able to capture the data on the securities that are out there and also get those securities registered. Because right now I'm not so sure that many of the companies have registered the securities that they have issued. I think this will bring greater focus on all public companies, and I think it will do well for all investors. I think access to the market will be a lot easier because you don't have to go through the rigors of the listing requirements. You can issue your shares and any broker can trade them. We hope that it will help also in capital formation, increase capital formation, especially for small companies. Just like it also helped, in the US with respect to the high-tech companies when they were coming to the market and things like that. Because the ability, is the ability to have a secondary market that actually deepens the primary market. If people knew they would not be able to sell the securities they've invested in, they would not invest in the first place. Or the corollary is, if they knew that they can sell the shares anytime they want, or the securities anytime they want, then more people will be emboldened to invest in securities, knowing full well that they can get out anytime they want. So it's important for us to have this liquidity enhancing vehicle so that we can broaden the capital market and expand, participation. For the companies that are public, we've already mentioned WAMCO, which is a company that I'm sure that the foreign investors will be interested in. And it has done very well over the years. You also have Fan Milk, which is also a public company. So with respect to foreign investors, I think they will find that there are some nuggets of value that have been kept away from them because they are not listed. And therefore, this market will also expose those companies to them. As you know, it's not every company that's listed on the exchange that foreign investors are interested in. So it will also be the same in this market. They will pick what they are interested in. Of course, most of it driven by their own evaluation of corporate governance. And therefore, I think the thing that Nigerian entrepreneurs must also learn is that if you truly, truly want capital, you have to adhere by some corporate governance standards that people can live by, can live with, and therefore, will bring their capital to assist the business.
Beyond the introduction of new products, several other economic reforms are expected to drive the growth of the stock market in 2013.
There are a lot of changes that are happening right now. The key, the most significant of which one are the power sector reforms, the DISCOs, the GENCOs, and all the abbreviations. All those companies are expected, as the power sector reform sort of continues and sort of takes shape, it's expected that all those companies will eventually come and raise funds. A lot of those companies are currently trying to raise funds, but a more structured way and provision of some incentives by all the regulatory bodies will go a long way to deepening the market. Also, the petroleum industry bill also provides a lot of changes in the sector, and hopefully by the time that is passed is a strong opportunity to introduce a lot of new corporates into the capital market.
Another area which we're working on is essentially to ensure that there's sufficient financing to support the agricultural revolution that we're seeing in Nigeria. One thing that's a constraint is medium to long-term financing, but there are a lot of investors, both domestic institutional investors and foreign institutional investors, who are interested in that sector. What I expect is that before the end of the year, that there will be vehicles that will support the interest that we're seeing from investors who are interested in investing in the agriculture sector, and support the farmers, including small holder farmers, who are keen to have medium to long-term financing. We feel that there are structures that will certainly be originated before the end of this year to support the agriculture sector.
The shift of portfolio investment flows from developed to emerging and frontier markets is well underway. Nigeria has already taken its fair share of the cash, And assuming that the pace of economic reforms continues or gathers more pace, regulators and market operators seem poised to find new and interesting ways to extract the value that the capital market presents.